So I'm going to move on to a few questions about specific fund holdings. First of all, Naspers. It appears Naspers was added probably within the last year, and wondering if you want to talk at all about that. And secondly, the question is, how does the Naspers management team think about capital allocation and the opportunity set they have?
Yeah, these are great questions. And typically, because of the commitment and consistency biases, we try not to talk about current holdings, but over the years, I've sort of recognized it's sort of an interesting dynamic we have, because we have these like long-term compounders and we never sell. So it's like, what are we going to talk about? So I will make a couple of comments on Naspers, but I'll keep it high level, because the commitment and consistency biases are really real. It's like when you make a public statement about things, it's very hard to go back and change your mind or recognize if there's an error. And so we just don't want to get in that situation. But I will say that Naspers is, so for those who don't know, the incredible thing about Naspers, and people are going to have all sorts of opinions. And in fact, another reason we don't talk about portfolio holdings is because inevitably you will all have different opinions about each different holding. And some of you will love all of them, and many of you will find one or two you don't like. And that will become just the focus for you. And so we try to avoid that. It's like, there's but I will share this with you, and it will hopefully not bother too many of you, but it might become a really, really important situation. So Tencent is potentially one of the best companies in the world. It is one of the largest companies in China, one of the top three. They own things like WeChat, which has 1 billion users. They have a huge investment portfolio. They are the price is getting whipped around through everything going on with the Chinese Communist Party. And it's basically, we sort of expect, with broad strokes, I think it's fair to say that China's GDP will surpass the US GDP in the next decade or two. And this is one of the largest companies, and it's selling for like 1/3 of the value of the US large companies. And China's going to be bigger, and they have 1 billion users, and the 1 billion users spend like a day. And by the way, they're in everything. It's fintech, it's everything. It's quite remarkable. So that's Tencent. Tencent, we've done quite a bit of work on, and recognize it as being, and it's growing at 35% per year. Okay. It's like smaller than Berkshire Hathaway and making way more money than Berkshire Hathaway and growing at 33%, 35% a year. It's incredible what they've created. What's interesting is that Naspers was a little company in South Africa, and they 20 years ago found this little company called Tencent in China, and they took $20 million and they bought 1/3 of the business for $20 million. And what happened is they then took that home, and Tencent became this behemoth, and Naspers inevitably ended up owning this huge amount, and they are breaking the Johannesburg Exchange. The structural situation is a big problem. So they're the biggest on the Johannesburg Exchange now. They're 23%. They're hitting all sorts of limits because investors can no longer buy the ETFs because they have too much exposure to Naspers. And so the management is working through all sorts of things to try to close this valuation gap. What's interesting is if we use just really high level numbers, we think Tencent's worth over $1 trillion right now, but let's say it's 600 billion in the market, and they own about 28% of it or so. Basically, the value of their current Tencent holdings is like a 40% discount. The price of Naspers is like 40% discount to just how much Tencent they own, and they own other things as well. So there's like call options on other things where they could have other big gains. So we're basically getting this levered play on Tencent through our ownership of Naspers, and Naspers management is going through this systematic approach to try to close this valuation gap, but there's a structural issue. So what have they done? They've taken all of their e-commerce subsidiaries and they've spun them out and listed them in Amsterdam as a different e-commerce entity called Prosus. So Prosus now owns, it becomes quite complex, but Prosus now owns Tencent, and then Naspers owns Prosus. So now Prosus is trading at a valuation gap to Tencent, and then Naspers is trading at another valuation gap to Prosus. And ultimately, there becomes these super high gaps. We don't know when they'll close, but as Tencent grows, Naspers and Prosus should also be growing. And management is they have a pretty shrewd capital allocation strategy, and they are working very hard to close these gaps. There's all sorts of different political situations, because we have situations with China, we have situations in South Africa, but we're monitoring it pretty closely. And it's so attractive to be able to buy one of the biggest companies in the biggest economies in the world that's growing at 35%, selling at a discount to itself, and then through an external entity that somehow is trapped in the system, selling for a deeper discount to this. So if we see Tencent double over the next 5 years, we can see Naspers go up 4 or 5x. And I don't think that would be I think that growth is still in an infant stage. So it wouldn't be where we stop. It would just keep going from there.